Hey, Ryan, why don't you pull up Amazon's margins real quick?
Well, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when you said that.
Wow, physical philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It's Saturday. It's 8 p.m. Eastern. And on Saturday, 8 p.m. Eastern, you could be doing a whole lot of things right now. You could be like Tactical Shoe Shiner and serving up a bunch of hot dogs and hamburgers to a bunch of fourth graders right now at a AAA baseball game. Or you could be where Real Man's investors are at right now and here on the Cashflow Kings, where we actually buy productive assets that don't erode over time, as one could say. But fiscal, it's been a long 8 days now. We actually didn't go live last Saturday. A lot of stuff's happened since then. And, life's good. But what could some people be doing right now that clearly aren't on the High Tide Roundtable here on the Cashflow Kings? Highly anticipated episode tonight.
Well, they could be doing something that involves what you might buy at High Tide. I'll tell you that right now. They could. They could be going out to the club, smashing the vodka. They could be going out doing tequila shots off of a stripper. You got to say that for the week, not Saturdays, 8 p.m. Eastern.
I
mean, I call it Tuesday, but most people do it on Saturday. They could be doing a little bit of the vapey vape. They could be cracking a pack of Marlboros. They could be sipping on some Bud Light.
Bad stuff. But this is the place for real men come every Saturday, 8 p.m. Eastern, to expand their knowledge and not expand their lungs, that's for sure. But welcome in, everybody. And you may be wondering right now, Ryan, why are your traps looking a little extra big today? Why are your arms looking a little extra wide? And one, it's because I hit back day today. But two, I have the official, that's now released, the Cashflow Kings merchandise on. This is amazing, everybody. We get to shill you for merch now. And we're about to do a completely shameless plug, which has been pretty much like 10 months in the making now. We recently hit the 500 subscriber monetization, which means we can gouge you guys for money. So we do have some advertisements, as the kids say. First off, we have the merch. And we have the merch that I was actually... I previewed it a little, but I was really excited about making this, and I'm very proud of myself.
He did a good job.
Well, yeah, we made stuff that avid gym goers would like to wear, or you could wear it at home. But we have the Cashflow is King. We have that on the front and the back if you like it. We have that in black. We have it in white. We also have mugs as well. We know some of our viewership loves mugs. Fiscal's dad in specific. You open up your brokerage one day, your Tesla sandwich is down 20%, smash the mug, and record it, and we'll buy you a free one. So there you go. We had to make the Cashflow King again hat. Definitely not going to get sued on that. And the bucket hat for that one, which I might get. But I have this one for now. I got the heavy tee, the pump cover. Good times. Scrolling down, and I know this was a popular one. Shout out to Leaf here, but we have the Making People Wealthy merchandise. Now, Fiscal, I know you like this one a lot.
That is correct. That's a little bit of a play on words involving a stock that I may own. Maybe my top position.
And I heard there's a royalty too for every person that buys a Making People Wealthy shirt. That goes into buying about, half a share of MPW. So, big stuff there, big stuff.
True. And
lastly, of course, the one that I have on, the CFK NWO Inspiration. Very nice. I got the heavy tee. I'd suggest go a size up. But it's honestly probably better quality than the other one I have, which I got from my other channel. And then, of course, we have channel memberships now, and this is the real fun part. With channel memberships, you have some pretty cool perks, all for the low cost of $2 a month, $1.99 technically. You have these nice looking emojis that we spent a lot of time on. We have 3 emojis to use in the chat, which is Joseph Carlson, Meet Kevin with the clown emoji on, and the Cashflow Kings logo. That's pretty cool stuff. you also get access to the Forbidden episode 32, and we're having 2 episode 32 veterans on tonight. It's not every day that somebody gets to watch episode 32, that's for sure.
Very
And
true.
of course, you get to like recommend any video topic, any, you get priority essentially. Fiscal, where else can you find that kind of value for only $1.99 a month?
Southeast Asia, maybe.
That's right. Go out at 11 o'clock. Anything can happen.
Exactly.
I think it's time. I feel bad for everybody that's not new to our channel and is not accustomed to this kind of jokes. But welcome in, everybody. We have Lincoln, the high yield warrior, in here. We have Fuhat, another high yield dividend warrior. Beto Stocks, another MPW warrior. And I do believe there is a tier that's like high dividend yield warrior or something like that. So money can, they say money doesn't buy happiness, but money can buy you the high yield dividend warrior status, and that's, I think, happiness. All right, let's get into the high tide roundtable though. First off, all reoccurring guests tonight. Good to see. First off, we have Blake Downer. Welcome in, Blake. Blake joined us a few episodes ago, and that one blew up. He did pretty well. And, we did have a segment regarding high tide on there, and the people loved it, so we figured we'd dedicate a whole episode to it. Coincidentally, right when we get monetized.
These coincidences, they happen.
What a coincidence.
I hope it doesn't screw up your monetization. YouTube hates certain words.
Oh, okay. Well, we'll use Zaza for tonight's stream.
The code word is Zaza.
Welcome in, Blake. Another reoccurring guest, episode 32 veteran. He survived episode 32. That was another potential merch idea.
Yeah, I survived episode 32 needs to be a shirt or something.
Hopefully we don't get I won't say that. For the safety of the viewers and our guests, I won't say what I was going to say. Welcome in, Bacon, though.
Thanks.
From 2A1G, 2 accountants, 1 gap. Yep. And lastly, and I said, first super chat goes into our friends down. First super chat, I'm buying a coffee from Starbucks for our new honorary co-cult leader of the Starbucks cult, Capital Mindset. I like that. But welcome in, everybody.
Reporting for duty.
That's what I'd like to hear. How much Starbucks do you own?
Shares wise?
Yeah, we'll go shares wise.
Let me pull out my broker.
I like this. That's a good start to the show.
So many that he has to check.
Yeah.
No, it's not that many.
Everybody make sure you take a look at his reflective sunglasses.
Password. Hopefully you don't have the hidden password on.
I do.
Oh, good. Yeah, it's a bit of a fear one day that, accidentally me or Fiscal, we write the wrong things and somebody catches it. Where's Bacon's arm? That's a good question.
Yeah, it died. Budget cuts.
It disappeared. He lost it. He lost in episode 32.
I finally have a good year to date, and this is what it costs. You must sacrifice a limb.
Sacrifices need to be made.
When somebody says I'd give my left arm to have Meta at $88, well, he actually gave it.
He did.
Yeah, joke's on me, though. I sold too early in hindsight.
I have 237 shares of Starbucks.
And that's less than 1%, correct?
Is it still a buy, do you think?
Let me see the.
It's always a buy when you're in the cold.
Still a triple cross.
It's Paul bought it, so questionable on its performance in the next months or so. But if he bails, it's mooning.
Okay, that's the thesis, everybody.
Be careful, because I thought the same thing when he sold it. When he sold his Intel, I thought it was sure to moon.
Oh,
1.2%.
Okay, there we go. I like this. What a good start to the evening. All right. So we get what topic do we want to start with? How about we start with everybody's individual brief and thesis? And I think we start with Blake here on the top because he's the high tide cult leader.
Sure. So I'm here because this company has a really competitive business model. They have competent management and they have a low cost of expansion. And I expect them to do really well over the next, several years to a decade. I think that their business model is going to be capable of capturing significant market share in any market they're allowed to enter.
Bacon, you want to go ahead?
I thought it was compelling enough given the price at the time that I bought it. That it's worth a speculation position in my portfolio. So that's where it is for now. So we'll see how the ride plays out.
Now, when you say speculative, what do you mean by speculative? And like
Like
what are you going
this isn't like a 10% or over position for me, but like I thought to myself, there's enough room in my portfolio where I want to allocate about, I think it was like 2% at the time. To be fair though, like to this, it's decreased as a percentage of port, but that's just because other ideas have been working faster than anticipated and more violently. But no, like again though, like I still haven't trimmed or sold or done anything funny with it. Like I'm just like I thought the original pitch was compelling enough for the allocation that I thought, and I'm willing to put a little bit of money behind it. I'm not shorting it by any means, and I'm not scoffing at
short.
it. No,
He's short. Look at him.
I hate you,
He's
Fabio.
short.
There's a reason he doesn't have sunglasses on tonight. There's a
Yeah,
Yes,
reason.
I am the unstylish one. I've always been the unstylish one. I'm sorry. But yeah, there it is.
There you go. Mr. Capital Mindset, would you like to share your thesis?
So when Blake first brought this up to me, I was at first admittedly a little bit skeptical. The general, kind of ickiness towards anything involved in that product type. Definitely I was not immune to that. But then after actually listening to the points you brought up, it's basically, if you think about it, the unit economics of it all, it's just like a retailer. So I view it as another retailer, and the analysis that needs to be done to this business is that of any other retailer. It just does a product that is or has been kind of taboo, depending on what circles you run in. So some of the details that really are interesting about this business is when you break down each store economics, it seems like they have a very low cost to set up. And then the recovery period for each new store seems to be very low. Now, I'm not one to want to just hype it up. I want to talk about the potential, downsides. And the real downsides are, frankly, if I had to pinpoint it, is probably going to be around the share dilution. But that longer term may not be an issue if the rest of the stuff ends up working out. So dilution for dilution's sake can be bad, but dilution that we can say as a capital allocator, we look for meaningful dilution, stuff that's geared for a purpose. So if you can generate a higher rate of return than the cost of that equity that you raised capital with, you're still going to come out on top. It's really about generating a spread between the cost of capital, via debt, equity, etc., and what you can therefore invest in that. And in this case, they issue a lot of shares to acquire new stores. And there could be other operators out there in the market that may have cornered a segment of their geography. And instead of High Tide going in and getting a new license for that area, it may be easier and less of a headache to just acquire that store and that license. And they already have the good real estate in many cases. So I think that longer term, if that's the play, and then it still becomes just a winner take most conclusion, I think this dilution is not going to be that much of an issue. We'll see what happens in Germany, because as Blake pointed out in his thesis, that may kind of spur up some dilution in the future.
Lucky we don't have Dividend Dude here to talk about share dilution. For those who don't know, we don't understand why REITs and utilities dilute these days. Fiscal, do you want to share your thesis?
Well, I'm but a newbie in the cult, but basically we had Blake on that one episode, and based on his encouragement, I looked into the financials of the stock, listened to an earnings call, and I found myself really impressed by the amount of free cash flow they generate for their market cap and for sort of how beaten up the stock price is. You would think a stock that's had its price beaten up this much would be negative on their free cash flow, and it couldn't be further from the truth. In fact, they are managing to still grow at a fairly reasonable rate while maintaining free cash flow positivity. And it seems like they can either put the accelerator on their growth at the cost of some of their free cash flow, or if they need the cash, they can kind of pump the brakes on their expansion to free up cash. And the fact that they have that option to do that, I think makes them very versatile and flexible. And it looks like it's worth a good little position in my portfolio, we'll say.
Now, what do we mean by little fiscal for the people who don't know already?
I think it's around right around 5% right now.
There you go. What's the split right now, Fabio? What's the split?
Well, I decided to change up uniform a little bit to match, sunglasses, tank top. I originally came out with a button-up shirt.
It's practically the dress code here on the Cashflow Kings.
I know. I don't know what tank I'm gonna get.
Yeah, you guys should just only use tanks. Don't go strongman, like complete shirtless. But
right,
we might do shirtless for a certain episode, Fiscal.
So I actually consider myself kind of the halfway point between somebody that wears a proper shirt and strongman personal finance. I go with the tank top so that you're not seeing my nips, but at least you can still see my muscles.
You should do the string shirts where it's like you're playing around, like it's like they can almost see it. It's like just covered.
The wind is just right that day.
When I'm especially
any little movement.
I do have a couple of string tank tops that I have, but I'm not lean enough right now to do one of those justice. So it'll have to wait.
The cut is not going bullish. Too many Starbucks, impossible breakfasts.
More like too many carne asada fries.
My thesis with High Tide, I was gonna buy some if Raj Grover came on the show, but he didn't, so I don't own any right now.
No, you're not.
While we're on the topic of Raj Grover, I want to hear everybody's thoughts on Raj Grover because he seems like a very unique CEO, and I know Blake is smiling already at this because that's a big part of his thesis. But thoughts on Raj Grover, Blake, if you want to start.
So he's a shark. Business is really competitive. All businesses are really competitive, and he grew up surrounded by people who understood competitive industries. They understood the shipping industry, the import-export industry in his case, but he was taught people might be like, oh, on the streets or whatever, but he was taught by his family, what it takes to run a business and to be competitive. And the more that I look into him and his capabilities, I don't think he went to formal school at all. And he's, a shockingly good negotiator. He knows his business. He knows his industry. He understands that we have a lot of these tools that are in this company that other retailers have successfully employed in the past. And he's just sort of Frankensteining together all of these things that worked out for other people. Like people like to compare this company to Costco. People like to compare this company to Starbucks. People like to compare this, I like to compare this to a gas station. He takes all of these already really proven strategies and he's sort of cobbled them together into this fairly unique business model that he's busy piloting his way to the top, so to speak. I really feel like he's internally motivated. He's sharp. His motives are way in alignment with shareholder motives. So all the incentives are lining up, and I think he's going to continue to pilot this company very well going forward.
And I find it interesting. You brought up the comparison to Costco because it's the membership, the premium membership program that they have going on, and that growth. I mean, that's been one of the most important KPIs I've been paying attention to, at least in the last earnings report and going forward. I think that's what all of us should be paying attention to. If we really start to see that pick up in a meaningful way, then that might sort of change people's narratives. There's still, I think, a stigma associated with this kind of business. So if you look at the ownership structure as to who owns this, it's pretty much almost the largest cohort is retail investors. It's not really one that others can own as of now. But if things start to change, we might see different kinds of capital start getting allocated to this business, because at the end of the day, what they're trying to figure out is the retail economics of this. If they can figure that out, we're in business. It's they're not reinventing the wheel, but they may be the best in their category. I have one question for Blake and everyone else too. What do you guys think about the encroachment from companies like Alimentation Couche-Tard, for all the French Canadians? I'm so sorry. because I'm trying my best because they go like, no,
Couch tard.
it's not couch tard, Fabio. So it's like, okay,
It's a
alimentación
gas
justa.
station company.
It's a gas station. It's one of the largest in the entire world. And one of the things they've begun to do is through some stores, they're like a pilot program testing this out. They're going to start selling said product in Canada. They're from Canada, by the way. They're a Canadian-based company. So I'm curious to see if anyone thinks they're a legitimate threat or if there's room for them in this space too. There's room for everyone, so to speak.
Well, from what I've heard, I mean, don't high tide stores have like more of a unique kind of experience to it? Like,
Yes.
okay.
Yeah.
I was
No,
gonna say.
anecdotally at least, because I was actually going to pre Fabio's question, going to bring that up. Like, thankfully, I've been able to interact with an international group of people. One of them happens to enjoy said products and is like, "Yeah, my local weed store is kind of crap, but you know, there's a high tide affiliated store not too far away. Wow, sure is packed in here. Wow, prices are great. Yeah, I didn't go for the premium membership, but I went for the paid ad like tier thing where they were straightforward and honest. He knew what he was getting himself into. So from that perspective, I think the market will likely be such where gas stations will be competing with other people that aren't high tide.
Now, did your friend happen to get a picture of somebody purchasing any of the stock, if you know what I mean? Jeremy
Yeah, like not to Jeremy LaFufu it up. He was trying to, but like I was just relying on his own word and his small little sample size of one experience in his local area up in Canada, not to fully dox the person, but
Gotta up the due diligence there.
yeah.
You aren't taking pictures of
Ryan, do you want to pull up a photo of what the inside of a Canna Cabana looks like?
Canna Cabana.
Yeah.
We
So
actually have one in Niagara Falls near us.
Yeah, so like outright like competing vaguely, but I think it's big enough where you know you can have multiple.
What's the weed smoking age in Canada? Is it 18?
It's probably 21. I don't really know.
Some nice LED lights.
So Capital, the last time you brought up Couche-Tard, they definitely rang a bell, but I couldn't place from where.
So their brands?
Yeah, but I did a little bit of digging afterwards, and so High Tide already drove several competitors out of business, or I should say, the current macro situation drove several competitors out of business. High Tide is not helping; they're definitely making things worse for everybody else. But one of them was Fire and Flower, and Fire and Flower had built a relationship with Couche-Tard and was Couche-Tard backed. Similar to, you know, like Kron and Altria Group or OGI, and you know, like this is not the only time that this situation has happened. And Fire and Flower went under because they had really large, expensive stores. They were sort of going off of like a convenience model instead of a discount model. And I think that model is going to do well, but I also think that the discount model is going to do well. There will be many different types of winners in this space.
Okay, yeah, because it's safe to say that it's not like just because Couche-Tard is like bigger, it's gonna win. Never always the case like that, but okay, so that was good to know. They were backing one of their competitors that went bankrupt.
Yeah. So Couche-Tard has already tried to get involved at least once, and they might currently be trying to build a relationship with yet another competitor. You know, it's not like they've all gone bankrupt, just like half of them.
And I imagine the relationship is not very favorable to whoever takes the other side of that.
Yeah.
Which is interesting. You would think that because Couche-Tard is like pretty well known for M&A on all these different retail concepts, because they don't just only own gas stations. They've also bought like small convenience grocery store chains in Europe. This doesn't seem like that much out of the realm of possibility. And I would think that people at Couche-Tard who are paid really well would say, why don't we just buy or buy a portion, buy a small stake in the largest one, which, by the way, would start to bring a different investor base into the mix. Because again, like I said, right now, High Tide has a little bit of a fickle investor base. You can kind of see that with the price action. For sure.
I think eventually it'll be super clear to multiple players that they want to gain exposure to High Tide because it's sort of like this best in class. Like the last time we talked Capital, you mentioned the phrase secret sauce. The company has definitely stumbled upon a secret sauce that is very successful, and people that FOMO, people will want to be a part of that. They'll want to make sure that they're not missing out on that opportunity.
Okay, absolutely, yeah, I can see that. And right now we're seeing it get back under 10. Well, what is it now? Like 15-12% free cash flow at the current price.
Yeah. Yeah, for anyone still accumulating, the recent price action is a blessing.
Oh wow, I did not see it go back to 205.
Oh yeah.
This is
oh yeah.
Yep, it's been dropping.
I definitely added a little more this week.
And,
so
I tried to warn all of you, it has a history of dropping after earnings. I tried to make sure I was pretty loud about that.
Is there any reason for that?
There's a bunch of conspiracy theories about that. The sentiment on the industry is super sour, and I think that there's a rather large crowd of shorters who just short every cannabis company immediately after earnings, no matter what they say. I think that that's a big part of what's going on.
Do you have the data on the short interest for High Tide?
I could try looking it up on fintel.io, and then TradingView will also sometimes show you short volume, but not short interest. Hang on, let me look up.
So for the rough math here, we're looking at roughly 20 mil in free cash flow off of a market cap of 166 million. So yeah, well over 10% now.
I'm looking.
Shout out to Keith Allen's comment.
Yeah, so
even though I
this
have
is
my
interesting.
Even though I have my shares, I may or may not have some sold puts out there as a bullish expression. So
Wow.
yeah. I count that as my allocation, though. By the way,
Keith, you're gonna have so many gains. You could put all that money into Starbucks and Target when you have it all done.
Yeah,
Talk about the gift that keeps on giving.
Target and Starbucks.
That's a pretty
The
chunky
Becky.
position.
The Becky ETF. My feelings for Target have declined recently. It's just there. It's no longer recovery play territory. It's no longer massively. It's no longer like doesn't have that the shine to it that it once did.
Don't be afraid to let go and replace it with High Tide.
Oh no!
So
Not financial advice.
As far as short interest goes, it looks like we have 5.25 million shares short right now, and that comes out to about 12.3 days to cover.
Okay, so nothing.
Yeah, nothing that amazing. If it were like 30 days to cover, go get a HELOC and short squeeze this thing. But this is the 12 days to cover is nothing to be drooling over.
Yeah, it's still something. I'd imagine though, I'd have to try to simulate it on my end on Monday to see what it would be like to short. What's the cost to borrow, etc. How many shares are available to short? But I imagine that's probably quite high. There's probably a lot of shares available.
I know a couple of other longs that have share counts well up above 100,000 shares, and one of them was bragging about making 6,000 a month from share lending.
That's juicy.
Yeah.
Well,
and every time he brings it up, he's like, they have to buy back eventually.
I guess I suppose.
Well, he could put all that money into Tesla and crash, and he could have a field day and go to the Bahamas. He could sip on Muay Thais in the beach. He can go to pool with the girl.
I'm pretty sure he just buys more High Tide shares with it every month.
That's the way to go.
He takes that short interest.
Yeah.
Oh, so wow. So then that's pretty expensive. 6,000 a month for what? Is it 100,000 or is it like 200,000?
I don't know how many total shares he has. He has a huge number of shares. He might be the highest conviction shareholder. I probably should have reached out to him specifically, but I made several generic offers to try to get him and several other people from the various discords to come on, but most of them are camera shy.
That makes sense. That's
yeah.
Fine.
They want
we let people go faceless on this channel sometimes.
Yeah.
The dividend dude exception. That's what we call it.
Did roll.
Yeah,
Yeah,
Raj Grover better come on the Cash Flow King someday, one day, and I'll buy some shares.
Once I get to 100,000 shares, maybe I can email investor relations for you and make it happen.
I do like how active he is on Twitter with shareholders because he actually he liked one of our posts. You know, I like the CEOs who are, you know, they don't give you the creepy vibe when you listen to a talk. You know, Laxman from Starbucks has a little bit of that. Brian Cornell from Target definitely has a lot of that. You know, I like a CEO that's on the level with the people, one could say.
Oh, yeah. Oh, one of the things that, like, and this is very, very old news, so feel free to like sigh and roll your eyes at me doing this, but like I liked that the management team was thoughtful enough to have their shares listed in all the markets that they foresee plausible movement in the future, i.e., Germany and the New York Stock Exchange, like that, or Nasdaq technically. But like you know, it's a signal of, yes, we understand what our product is, but also what we retail rather as a product. But you know, it is a signal that they do things at least legally enough, clean enough, and you know, it's a little signs like that there's enough buy-in, but also compliance, and you know, that's why I thought the money was sensible.
Do we all think that Zaza is going to be federally legalized next
In the
10
US,
years?
you mean?
Yeah, in US.
Next 10 years, probably. Next year, I don't know.
I think it's getting rescheduled to 3 very soon, but I think it's going to take several more years before we see another push toward actual being delisted from the scheduling system altogether and started for it to be treated like alcohol. I think that we're several years from that, but I think we're months away from Schedule 3.
Now, Blake, I think you mentioned it when you came on last time, but what kind of price movement did you expect it to have on high tide once if the U.S. eventually federally legalizes? Because I know we talked about a potential huge boom for all tobacco, Altria.
Yeah, I have basically 2 answers for that. With no euphoric rally, I expect the company to gain its intrinsic value at like 15 or 20% per year or something like that. We can sit down and produce an estimate here if you guys want to, but with a euphoric rally, if the industry goes into another one of these rip-roaring, you know, face-ripping green candlesticks that want to punch their way up to the top of your TV screen, I expect this to end up somewhere in the $15 to $30 range. And that's a part of my thesis for why I chose a Canadian company, is because it's sort of a win-more situation where, like, the win is no euphoric industry ride rally hits, and the company just plain grows at the rate it's supposed to from here to for the next decade. The win more is that at some point over the next decade, there's a massive industry-wide rally, and this company goes from trading somewhere near its intrinsic value to just absolutely dramatically overvalued, and then I get to exit for a huge gain way above normal rational expectations.
Did you mean USD or Canadian dollar?
I meant USD.
Okay.
Yeah. And you know, don't get pissed if it only like tops off at 14 and, you know, and I never see that 15. I'm definitely going to be averaging out as it goes up. And the higher it goes, the more I will shed.
I bought Target at $220. I'll take whatever I can get these days. So I'll be looking a lot deeper.
Yeah.
So, so are you planning on, you saying shedding the position beyond those prices?
Yeah. So if no euphoric rally happens, I will treat this like a normal long-term investment. I will basically hold until the fundamentals and or the financials of the company become unattractive, and then I will sell due to either a fundamental or a financial reason. Like their business model stumbles, dramatic competition shows up, like Raj dies in a car wreck. You know, there's all sorts of reasons why I might sell a long-term investment. Oh yeah, I hope it doesn't happen. I hope he continues doing his thing for decades. But if a euphoric rally happens and it goes dramatically overvalued, I will be forced to shed some of my position and take profits. I hope that was clear.
Yeah. No, I thought it was very clear.
Yeah, that could be. I think that could happen just based off of like how investors are treating the rescheduling news. There could definitely, I could see a euphoric rally and high tide benefiting from that. May not be the best beneficiary, but the fundamentals are what would keep me comfortable owning the shares through that.
And that's why I chose this company over a U.S. counterpart, because with the U.S. it's very binary. The outcomes of what could happen, either the 280E taxes don't go away and the companies continue to struggle, or the 280 taxes go away and everything, all of a sudden they become more profitable. Whereas if you choose a Canadian company, there's going to be some sympathy move off of that. And then if the 280E taxes never go away, it doesn't really negatively affect HITI. Yeah, it's no big deal. So it's sort of like a win/win more situation. That's one of the reasons I chose a Canadian company over an American counterpart.
Jeff asks how many shares you have.
Jeff, you can ask me that in Discord, but I've already told you not enough.
That's members only content there, Jeff.
Yeah. I've known Jeff for a little while now. Jeff, not as many as you.
What will MSOS do when the rescheduling goes through?
I think that the old all-time high of around $55 a share, it's possible for us to return to that. So there's a couple of factors going on that why won't the old rally and the new rally match up? So the old rally happened during the 2021 easy money era when cash was cheap and people had lots of cash. However, it was driven purely off of hype and hope, and not like an actual change in laws or a change in how these companies are taxed or anything like that. The next rally will be happening during a more tight money era, but it will be because of an actual change in rescheduling and taxes in 280E. And so I'm expecting, even though the old one was during easy money era and the next one will be done tight money era, I'm expecting the rallies to be somewhere around the same height. So maybe MSOS will shoot up to like $40 to $70 over about 6 months. It'll take months for it to get there. There'll be lots of volatility. There'll be lots of violent pullbacks, and it should chop its way up over about 6 months. And I'm not sure where it's going to reach, but I'm expecting somewhere like 45 to 70 or something like that. It would be reasonable. The old high was 55.
Well, if Ultra ever breaks $50, I'd be plenty happy myself.
You have Ultra shares?
Yeah. And I'm up on them.
That's one of very few stocks that both Ryan and I have shares of. Yeah.
Yeah.
Portfolio overlap.
55, 60 around there.
I think Altria is going to start buying up cannabis companies, once it makes sense for them to, maybe next year or 3 years from now or something. Altria, British American Tobacco, they're going to step in and they're going to try to acquire the types of MSOs, multi-state operators, and licensed producers that they think make sense for them. I'm not sure which ones, but I think Capital tried to bring this up when I went on his channel like a month ago, and all I could do was hyper focus on HITI at the moment. But I agree with you that they're going to pick up growers over retailers. I think that's something they're going to target.
And I have a comment that I wanted to bring up from the earnings call, the recent earnings call. And it was after a question an analyst asked Raj about, or the management, but Raj specifically, about expansion in Germany. And the last point that Raj made is actually about the issue of dilution, by the way. So I'll read it out word for word. So we don't want to tie out our paper. We don't want to extensively dilute at this point, as some of the other players have done with extensive dilutions over the years and raise cash, and you still cannot consolidate your financials. So we have a great plan for when the US opens up, but we're not in a hurry to consider funky structures at this point. So referring to the concerns that in order for you to grow in Canada, what you did is you just printed shares. You didn't print money, you printed shares as a currency to acquire new stores. And that was a concern that, for example, some people I've spoken to have about expansion in Germany, expansion in the United States. Well, are they going to go as crazy as they did in Canada? In which case, maybe it's a wait and see story. But it appears as though like management's kind of saying, well, we're at a different time now. We're actually producing cash flows. We may be able to take a more structured approach to this expansion than just kind of, blunder busting shares out and then acquiring a bunch of stores. So I don't know if you guys wanted to share your thoughts on that, or do you think he's actually maybe lightening up a little bit? Like there is probably going to be a lot of dilution, but he doesn't want to panic anyone for it. What are you guys seeing as far as that goes?
I want to let both of them pipe in before I just start talking.
I think that he'll probably be as conservative with it as absolutely possible based on what I've heard him say and seen so far. But Blake knows him better than I do.
He comes on the Cash Flow Kings and I'll answer that question.
Bacon, do you have an opinion on that?
I do. I think it'll be very, very situational because given the Canadian market's rules on store openings with that lottery system, you kind of were incentivized to either, as Fabio said, blunderbuss some shares around, or the other alternative is what? Take on a huge amount of debt, ruin your balance sheet, pray to God it all works out in the end. So I think it's nuanced a little bit there. I wouldn't be surprised if the way things shake out with certain markets, like, are you willing to share dilute for prime real estate if the cash flows make sense? I, as a shareholder, will be a little annoyed, but that's my personal bias to get over, and I'll get over it. If the cash flows make sense.
Vici!
Yeah. So again, I think it's very, very nuanced and situational. I don't foresee them being that sloppy, because if they were going to do squirrely, shady stuff, they would have done so already, because company's been founded since what, 2009? They've been around this long. Like, if this were a fraud or a farce, probably would have died by now.
Yeah. And quick question on CFOs, right?
Yeah.
We just got our first permanent CFO, correct?
Yeah.
Yep.
Yes. So we got to just keep an eye out for CFO transitions. If there's a ton of CFO transitions, maybe. All right.
Yeah.
Then we start to worry. But that the previous CFO, who was always meant to be temporary, because that's what the Bears would bring up. The Bears would bring up, oh, CFO is leaving. Why is that? Well, he was always meant to be temporary, as Blake pointed out. But this one, we'll see how this one lasts. But even that other one, how long was he there? He was there for quite some time.
3 years, something like that.
Yeah.
4 years.
That's a long time for a temporary.
Is that a long
that's
time for a
reasonable.
CFO?
That's reasonable.
Okay.
For a temporary one, I think that's kind of long.
Well, I think the temporary one was only there for a year. I think he was only CFO for a year. We can look it up if you guys want.
Okay. Let's get those details. Yeah. What are those details looking like? So if the temporary one was only there for a year, the previous one was only there for 3 years. But what was the previous one's prior experience? Because if it was not with larger enterprises, he might have been the right person for the job.
Yeah, I believe the original CFO they picked up when they only had like 8 or 9 stores and no websites, no other subsidiaries, no other companies, and so he walked into a very simple situation. And because of the acquisitions, Raj made it super complicated after about 2 or 3 years of rapid growth. And I think he just got overwhelmed. And so he bowed out because they were having trouble. They found the material weakness in their internal accounting. And they weren't going to have to face any major fines or anything, with the exception of if they were to ever misreport net income. And they weren't positive net income in the first place, so it wasn't super urgent. So they hired a consultant. The consultant stepped in and was busy helping them integrate all the different accounting systems for all their subsidiaries together. And then the original CFO bowed out and left. It was too stressful. It was too much, whatever. So they just had the temporary consultant step in as the temporary CFO for like a year. And then they replaced him with one more recently that has a background in international M&A.
We have a comment from Paul here, and he says, Canopy is still losing money, and how many years has it been now?
Yeah.
Paul's a frequent commenter on my channel, my main channel.
Yeah. Most of the industry is hemorrhaging money still, especially up in Canada. Canopy growth is a clear example of why people are scared to reinvest in this company. In this sector, in this industry, is because all of the largest, most well-known, most famous companies, almost all of them have negative operating margins. They're not able to actually run a sustainable operation, and it's a lot of it has to do with too much competition. I'm not going to say, like, if 95% of everybody is failing, are they all incompetent, or is there just plain too much competition? Those are questions I ask myself. I think it's too much competition. I can't just be like every single one of these CEOs is trash. It's just that they're all trying to tread water, or you can also view them as in like a gladiatorial ring. They're all fighting each other to the death, and it's still unclear exactly who is going to survive this, other than High Tide.
I mean, none of them. Yeah, they're all bleeding cash. They seem to be surviving or thriving. Not thriving. That's not the right word for this. They are surviving off of using SBC to pay off some of their expenses and diluting in general to raise capital to pay off expenses, because there is no money to be had here. But I guess whichever one of these die, there will be a new sucker to come out of the woodwork and start growing, and there'll always be supply for the stores, which is the point here. Store is a different business model. It's a tale as old as time.
It's like Costco. Don't tell Joseph Carlson about this company. You're doomed.
It's funny though, like on the growers, because at least Porter Collins of Seawolf Capital fame, or really Big Short fame, he mentioned that he likes Glass House, which I think is a grower. So I don't know if that's necessarily a directly clean or great sign for High Tide or for the wider industry, but I just hope that that means that enough smart people are looking and expanding the horizon and see, oh, this is a retailer that is trading at compelling prices and multiples, and we go from there. That's what I'm hoping, but we'll see. We'll see. I can afford to be patient with this one though, is what I'm getting at.
So since I turned 19 in November, I think it would only be fair due diligence if I take a trip up to Niagara Falls. I don't have to buy anything from the store, but I would like to inspect maybe some of the experience. How is it any different from going to Starbucks or Target and inspecting some of my favorite companies? So it
no
could
different.
happen. If somebody wants to super chat and pay for the gas money to go up there, I'll appreciate it. I'll put it on a Discover card. 172,000 shares of High Tide. Whoa.
Is this the individual who
No,
can lend out
this is not the biggest retail whale. This is just another one. Hi, Jeff. There are like half a dozen of these whales that have an absolutely irresponsible amount of their net wealth into this company because the conviction is so high.
And none of them wanted to come out of the cash flow kings.
Well, yeah, basically. Yeah. And I think a big part of the reason why their conviction is so high is because I was talking about the win/win more situation. Even if the company starts to struggle, you can always just exit during the next euphoric rally. Like next year or 3 years from now, whenever that happens, there's this sort of like backup plan B insurance policy in place where even if the company just doesn't grow revenue and margins don't expand or any of that you can still potentially exit for a huge gain just because when you're buying in between the rallies, Yeah.
Fortunately, there's no rallies and coffee houses and coffee shops, so I'll be waiting a little bit over here.
Hey.
It's temporarily Jover. Paul owns it.
Yeah. While we're on the topic of Jover, who's going to be the Democratic candidate? Who do we all think it's going to be?
I'm going to go vanilla and just say it's still going to be Biden.
I think it's Biden still.
I don't think they're going to force him out.
Yeah. Fiscal, you think Biden, right?
Yeah, I think he's too stubborn to step aside, and I don't think anybody has the balls to force him out. So, yeah, there you go.
I think pro gamer move, they make Trump the Democratic nominee just to meme the election. Wouldn't that be great? Historic even. Someone's on both parties, main parties like tickets. I think that'd be hilarious.
There's our short for the week.
Oh my gosh, no! You know what they should do? They should make it Vince McMahon, and they can have a rematch.
Oh my god, I can't believe this! It's the battle of the billionaires.
Citizen of the year.
Ryan, I sent you a couple of charts and
yes,
Discord.
I have them pulled up.
Okay,
which one would you like me to pull up?
I guess the store count one first makes more sense.
Cabana. That'd be a good song. Cabana.
So Skyledge is an individual that's been making charts and posting them to Discord for a while now. But I've never shared one on to the public because he didn't share them to the public, right? So he made the critical mistake of posting this to StockTwits, and so now it's fair game and everyone else can share it around. So this is the store count by province, and you can see that they're heavily concentrated in like Ontario and Alberta, and they just have a toehold in some of these other provinces, and so this is a big part of why all these long-term holders are talking about how there's still a lot of room to grow
in Canada.
Without even having to leave, we're seeing that they haven't even actually approached what I would consider saturation in either Ontario or Alberta, where you get diminishing returns on new stores because they're too close to the next store over, and that problem hasn't really happened yet. For this company, there's still room to fill in the suburbs and stuff like that, where when you open a new store, you will find an additional, 2.7 million revenue from new customers that are locals.
Are they mainly in urban locations right now?
So they tend to target like mini malls and right next to an anchor store where there's like a big box store or something like that. They tend to target the parts of urban society where you go to regularly to do your shopping. And so sometimes that tends to push them into the suburbs, and sometimes that tends to push them into like more downtown situations. A couple years ago, I was really ecstatic because they kept on opening shops up like in between like a gym and a pet food store, or in between a bar and a pizza place, and it's just these like staple businesses that if you're local, you're just already going to go to your favorite bar, or you're already going to go to your favorite pizza place, and you're going to notice the store right next to it. And so they really emphasize location mattering a lot for them because they rely on the foot traffic.
Did you mention something they were offering food products and snacks in the stores too?
I think you mentioned that, and I think it's a reasonable idea. So
Roger
Lowe's,
Grover, hear me out.
yeah. Lowe's
Just
managed
stop
to improve
Doritos.
their margin pretty significantly just by adding those little coolers where they sell soda right next to the cash registers. That one little move by the CEO, I think it was maybe 2 CEOs now ago. It was like a decade ago. They were like, let's put all these little mini fridges right in line. When you go to exit Lowe's, you have to stare at this bottle of Pepsi that you want to think about buying, and we're going to sell you this thing that you don't actually need, but we have a captive audience, so we might as well just try to hand some high margin stuff onto you.
Yeah. 80% marked up gross margins on Doritos. Oh my gosh. Roger Grover, hear me out. I'm not one that has ever done the Zaza, but I do know you can make some pretty irresponsible decisions when you're on it.
Doritos are guaranteed. They must always look good when you got the monkeys.
I know.
Question: Are they known to be cyclical in any way, or does every quarter kind of have the same amount of cash flows? Like, do we expect quarter 4 to be better than all the other quarters? Like
Quarter 2 lands in such a way that it's Canadian winter. So this is why I was warning you all that revenue might actually be lower this quarter for the first time in the company's history, was because it fell during winter. And historically, the last several winters, they've been opening up new stores at such a breakneck pace that it was drowning out the seasonality that comes from winter, where new store openings was just so loud compared to the noise that seasonality was creating that you weren't going to hear it. You weren't going to see it in the financials. So the last several Q2s, revenue went up. But if you look at other companies in the industry, like let's say, for example, Sundial had like a 15 or 20% quarter over quarter drop in revenue because of winter. Because going into winter, people stock up and they buy a lot of stuff, and then they don't travel around a lot when there's heavy snow on the roads and ice and all that. They just stay home. And then when all that's over, there's again another surge in buying when the spring arrives and the thaw comes. And so this company is affected somewhat by seasonality due to winter. The other 3 quarters all seem to be pretty stable, and margins all seem to be fairly stable. Like, I'm not seeing clear seasonality in margins, but there is clear seasonality with revenue.
How is their pricing power whenever like winter seasons come around?
I don't have a clear answer. They're already digging deep and offering people extra deep discounts, and I'm not sure if they do anything different winter versus summer or anything like that.
The reason why I brought that up, or the question, was because this quarter, which was the Canadian winter, correct?
Yeah.
This one, they generated more free cash flow than all the prior quarters combined.
Yeah.
And the margins that they hit, 7.5% to be exact, as quoted from the earnings call. I am impressed by this because if this is now like the base level, what they're showing is massive improvement, and they're not getting really much credit for that, or maybe people aren't really talking about it as much. I assume the whales definitely are, and people like yourselves in your communities are definitely talking about it, but I'm saying broadly speaking, it's not really talked about. And if the prior valuation or multiple on cash flows that I stated at the beginning of this podcast, I want to say that's not a forward, that's a trailing.
Yeah. So
the forward cash flows, if something like this keeps up, could be actually lower, depending on share dilution. So that's, again, we get back to that. That's the key. Share dilution. How is that doing? How is that going to happen? How much of it is going to occur in the next year or so? Because I looked at the 1 year. Looks like the 1 year share dilution was 33%. So as long as the business is growing in excess of 33%, we're having an accretive dilution. If it's less than that, we have a problem longer term. So
during 2021 and 2022, when they were eagerly handing out shares for stores, they were doubling revenue every year and increasing the share count by about 30% a year. More recently, now that they have achieved positive free cash flow, we're seeing more and more of these stores are just opened up organically through just cash. And so I think that a lot of it, the future dilution pace, like during these expansionary events when they're breaking into a new market, a lot of it might have to do with opportunity. The amount of opportunities that they see, if they see an abundance of opportunities, they're very likely to go nuts and do a lot of dilution just to hurry up and get the prime locations before other people do. If they're not seeing an excessive number of opportunities, they're probably more likely just to fund the expansion into a new market off of free cash flow that's already generated by the business.
Yes.
So it's sort of a double-edged sword here where I can't give a straight answer on that because I don't know. Like, let's say the U.S. opens up and they decide, okay, we're going to expand into Colorado. Well, if they only find like 5 locations that meet all the criteria for next to an anchor store and it's kind of small, it's in a good location. If they only see 5 of those, they're probably just going to pay for them with cash. If they find like, say, 50 of these opportunities, that is when I think that the potential for seeing a significant dilution event becomes real. It has to do with the opportunities available versus can you fund this with free cash generation. Also, Raj has been building this war chest where every quarter the amount of cash on hand just starts slowly grinding up. He's paying his debt down, he's increasing cash in the bank, and I think a lot of this is for a phase of expansion where he's going to dip into his war chest to pay for expansion. He's going to dip into his cash flow generation to pay for expansion. He's going to take on debt. He's going to have this open line of share offering that he's going to use for M&A activity. So he's going to employ all of the tools in the toolbox, but the rate that he employs those tools is probably going to be like adjusted by the number and availability of these opportunities. Like when he goes into Germany, when he goes into the US, more opportunities, I think that we're going to see a much higher revenue increase and we're going to see more dilution versus if the events happen and we see fewer total opportunities, like the scouts for the locations and everything. It's entirely possible that we don't see a massive dilution spike if the opportunities are small and few and far between.
Maybe they're getting ready to pay a dividend.
No, I really don't think so.
8% yield.
I was trying to find other numbers to kind of compare. Oh, sorry. Did someone have something to say?
No, the Oracle has interfered with your lines.
Because I was reading through this, like I was trying to find a figure to kind of cross-reference this to back in this point. The adjusted EBITDA actually did increase by about 45% year over year. So it looks like I have to look at to see what specifically goes into the adjusted EBITDA, like what are they taking out, because it's adjusted EBITDA, so it's
Right.
extra things going in there. But taking it as its word and say it's an honest approach to it, I'm making this assumption. It does mean that they are growing above that dilution rate. And I looked at the SBC. It's not stock-based comp. It can't be stock-based comp. Raj isn't just going like, I'm issuing all these shares and I'm paying myself. That's not what's happening. All that share dilution is coming from, clearly, if it's not SBC, it's something else, probably the acquisition. So they'd make some acquisitions. It's reasonable to assume that. And then we know that an acquisition, well, Blake, does it pay off instantly?
No. Well, I mean, in some ways, yes, but basically, the short answer is no. It takes about 9 months or so, and that's with a fresh to open store. Is the estimate is that it takes 6 to 9 months for it to reach maturity. If you purchase a store and just change the name, and that store already has an existing customer base, it would be fair to assume that it reaches cash flow positive more quickly than 9 months, because they already have regulars, and regulars are already used to coming to the store. And so it's sort of going to be like jumping in somewhere in the middle of that 9-month ramp up period. And I don't know where, but it's going to be dependent on every store. They already choose stores with significant revenue. And so the stores, when they merge into, they're already merging into a store that has the potential to very quickly arrive at maturity. I don't know. I don't have a specific number on how long that's going to take, but less than 9 months, right? Because 9 months is our estimate for organic stores. Non-organic stores, it should be less than that. It should be much quicker to reach positive cash flow.
And for Ryan, I'm going to send you something if you want to bring it up. It's a picture of the adjusted EBITDA calculation from HITI. So we can kind of see what are they taking out or removing, what adjustments are they making.
So he brought up margins and margin expansion. And so, Ryan, could you pull up the second chart that I sent you?
Yes.
So I took the specific margin and divided it by the gross margin. So if gross margins are, I think right now they're at around 28%. So all of these are ratios of the other margins versus gross margin. So this is a measure of efficiency. The company is just plain becoming more and more efficient as time goes on. We can see, for example, cash flow. You are right, Capital. It has reached a new all-time high, basically, or a new at least year-long high. These are quarterly values. And it looks like that it keeps making a series of higher lows, the cash flow. It varies from quarter to quarter, but we're seeing higher lows. Same with both the EBITDA and the operating are both trending upward. And I think a big part of this has to do with their white label offerings. They're constantly buying up new brands and developing new brands and offering additional white label opportunities. And a lot of these have higher margins, right? So this company has a blended business model where some of what they sell is very low margin and some of what they sell is very high margin. And when they launched Elite, one of the things that Elite incentivizes them to do is they have to acquire a family of these high margin offerings in order to sell to the Elite customers at the ultra deep discount. You have to first produce a product that has ultra high margins so that you can hand out the ultra deep discount. So anytime they sell one of these products to a non-Elite member at full rate price, or even at the minus 20% off price that the other discount club members get access to, it represents an event with higher margins. So as they produce a larger and larger number of offerings that are white label that have these higher margins, their conglomerated margins are shifting upward. And I hate to tell you that this is the new normal, right? But I fully expect that future cash flows for quarters going forward are not only are they going to stay positive, but I think that they're going to keep making like higher lows. You know, there's going to be some variance, but the overall trend for cash flow should keep going up. And I mean free cash flow margin. I don't mean, just straight up normal cash flows.
Don't tell Joseph Carlson that.
Yeah. Another thing that I think the incorporation of all these additional brands and white label opportunities is going to do is I think it's going to push their gross margins up higher. Right now, their gross margins are at around 28% or so. I think it would be reasonable to assume that we're going to see another like 4 to 5% increase in gross margins over the next 2 to 3 years as they push the number of white label offerings that they have. Right now, it's at around 12% this most recent quarter. I think the last time we talked capital, I told you it was around 15%, but they're trying to push it up into the 20 to 30% range. And so as they increase the number of these high margin offerings, their total margins should get better. Not only should the gross margins improve a little bit because the blended business model, but these other ways of measuring margins, I view them as efficiencies, right? So if you can get your operating margin almost all the way to 100% on this chart, you're super efficient. That means that you have no employee costs, stuff like that. And all of these, as they shift up higher toward 100%, I'm just viewing this company becoming more and more efficient.
Bobby, do you want me to pull up your chart?
Yeah. So
Fabio's probably got a fancier chart than I do.
no. This is just straight pulled from High Tide's report. So this is the adjusted EBITDA calculation, so you can kind of see what it is that they're backing out or not. But at the very least, at the very top, you can just say, we have EBITDA, and then there's another chart for free cash flow, which I'll also go ahead and share too, because I think a lot of members also might be like, EBITDA is bullshit earnings, So. But using it as a barometer, which they're highlighting, I just want to make sure that this barometer, regardless of, how we feel about it, is at least going up higher than something that on a per share basis is hurting us, which is share dilution. So I want to highlight some things to you. I think the adjustments are fairly reasonable. I didn't see anything in pause it or stop me if someone else disagrees, but looking at what they're taking out, it doesn't appear to be anything that I'd be like, wow, no, that's like, you definitely want to always pay attention. That's a consistent expense that's always going to be there. A lot of it appears to be just like gains and on various other things. The SBC might be the one that I would push back on and say, no, add that back in as an actual expense. But I'm highlighting, or I want to pause there for a second and highlight that it doesn't appear to be very large. If it's on track and there isn't any larger share-based compensation packages that are going to be exercised by year end, we're on track for less than last year. So that's good. I also checked on a quarterly basis. It seems like as a percentage of the size of the business, it's also coming down. So there's two ways to kind of measure the on a relative basis and on an absolute basis. We can kind of look at SBC if it's a problem. But just looking at EBITDA at the top, which does at least take into account share-based comp and includes all of these expenses or gains, we do see that it is also still growing. And then the free cash flow figure, if you want to pull that up as well. So this one, for a lot of people, this is more tangible, right? This, you might want to also, for some of you, come in here and subtract from it, stock-based compensation and see, are they free cash flow positive even with? Obviously, the answer is yes, because it's only 549,000 so far this year. And so you see with 1 quarter of free cash flow, they're more than well cover that. So as far as free cash flow goes, we were just talking about the margins. If this is the story and we keep seeing growth in this direction at that rate, I really have a hard time seeing how at some point, this company's going to trade at 2 times free cash flow or 3 times free cash flow. And if it still keeps up those growth rates, I fail to see. There was a comment, I don't know if you guys want to get into, where someone, I think it's a respectable, concern. It was that, yeah, you already knew. You read my mind. How did you read my mind?
I know. 45,000 liquor and tobacco stores in the U.S., and somehow you think the pot is exclusive and can't be sold in there. Good luck with that thinking.
I want to tackle this a little bit. and then I want obviously my fellow panelists attack it as well. So not the person, but the argument.
Mhm.
So the one nuance thing about the product in Canada is you need a license. I can't just go and say, hey, I have $10 million. I want to start up a store. I want to sell it too. No, maybe I have to go and buy the license from someone, but we're still in the early innings of this thing. And if it becomes more and more constrictive, the point is, it's like, you can't just start up as many stores as you want. There's a limit. And it's not like alcohol right now. That could change. Absolutely. I'm just going to say, that could change. And we don't know about the United States. But we were just spending some time earlier discussing how the thesis here does not need the United States. The United States could be great. That could be a huge growth opportunity for High Tide. But Blake spent about 10 to 15 minutes just talking about how just in Canada, there's a lot of growth still to be had. Forget Germany, just Canada. United States, I think I'm pointing this out because a lot of people, like, the main pushback, for some reason, I wouldn't even mention, I would say preemptively, does not need the United States. The conversation would somehow get dragged on, but the United States. And I'm like, that's not be like me speaking the same language.
Yeah, I'd also like to just point out that, since he's bringing up liquor and tobacco, you can buy both of those at the grocery store, and that doesn't stop exclusive liquor and smoke shops that only focus on those products from existing and thriving. So I don't know what the point actually is, unfortunately.
It's an argument between convenience versus discount. Just because convenience stores exist and are abundant does not mean that discount stores won't also find success. And think of it like this. Does the existence of Walmart invalidate a Costco? Because there's Walmarts everywhere, and there's Costco's, maybe there's fewer of those in the country. And does the existence of Walmart invalidate Costco's business model? And the answer is obviously no, because Costco offers this unique situation where you pay more, you pay an annual fee, and you get a huge discount. It's in my mind, it's sort of the same situation. It's also comparable to saying, like, man, how on earth do grocery stores make any successful anything? I can just buy milk at a gas station. It's that same line of thought. Yeah.
Publix.
Yeah.
Does everyone here know Publix? Publix has the highest markup of the grocery store chains in the United States, among the highest. How are they still in business? How are they doing it? Right? Because they're selling, in many cases, the same exact brand that you can find at these other stores. It's cheaper. Why? Why would anyone in the right mind go to a Publix? Why are they going to a Publix? Because there's a variety of other factors. I mean, you brought up already Walmart. I mean, or Costco. Like, I have no idea why I don't buy just every single thing at Costco. I don't know why I even go to anything else, which, by the way, for me, myself, and I buy most of my things at Costco because I'm a Costco fanatic. But I'm looking at other consumer behaviors. I don't base my judgment on the consumer just on my consumer behavior, because I would actually make a lot of mistakes if I did that. I would miss out on Becky, for example. Becky does, and I'm not a Becky. And so Becky is the ultimate consumer, by the way.
I'm a Becky.
Well, Becky is the highest. It's the final evolution of consumerism, the final evolution of a consumer. It's we all strive to understand Becky and get ahead of Becky so that we can profit from Becky. But anyways,
and get Becky in your bedroom.
Yeah,
I don't know about that.
So Paul, to sum it up, High Tide will do just fine because people are willing to drive right past a Walmart to get to a Costco. That's exactly why High Tide will do fine. It's the same concept.
I will drive right by a Walmart if there is a Costco.
And hey, people can buy alcohol at Walmart, but they still sometimes go to Joe's liquor store.
Yeah.
For whatever reason.
Compare like Total Wines and More versus the gas station. If you live anywhere near a Total Wines and More, it's worth it to drive across town to get to one because the deals are real.
Yep.
This is a crazy saga going on in the comment section. Everybody's going after Paul now because his name is Paul.
Hey, don't
these apologies. Good apology, Tank.
Paul's comment sparked an interesting conversation. Yeah. So thank you for the question, Paul.
It was a legitimate question. Like and I think counterpoints are brought up, and it's up to the viewer and the panelists each individually to decide what the conclusion is.
Okay, thank you very much for commenting, Paul. And you're going to get banned now, so never say in the chat again.
That's a joke for the record.
Dissector, you also still idiot.
Oh, Dissector an idiot? Not very smart at all.
I just exploded. Dissector, you are an idiot.
You wrong, cash flow kings.
you screw up, cash flow kings.
So maybe we can present now some ways to invest in high tide that might be a little bit unique. Some of the stuff that we discussed off camera before, and I think it's actually become a lot more popular. I can see in the chat from earlier, but selling puts right now. Yep. The puts here are pretty interesting. So if someone's looking to, for example, hypothetically, expand their current position, selling the $2.50 strike which is quite out there, but hear me out. The premiums you get give you a cost basis last I checked of about $1.80. For October, they were better before. Nice. For October. Nice. So so that would be your break-even point. So if you get assigned at $2.50, now taxes are something to consider. Net of taxes can be a bit worse depending on your income tax bracket. If you're in the lowest income tax bracket, less for you to worry about. But if you're in the higher income tax bracket, government's going to want to take more of that cheese that you just made. So your net cost basis, do the math and see if it's worth it, because it may not be worth it. Okay, it may be that it may be that you're in a tax bracket where 37% of it is going to go to Uncle Sam or more, depending on what state you live in. And then maybe now the net break-even price is over the current share price, in which case don't do it. It makes more sense to just buy the shares. Unless you're like that bullish on the short-term movement and you think it's going to go right past, $2.50, in which case you're kind of just you might be taking a little bit of excessive risk. But if it makes sense for you, it's something to consider, because you get a break-even price that is lower than today, and it could get better, by the way. It's something to keep an eye on. If we see, for example, the share price get down to $1.80, at that point the premiums might get juicier. Play around with the duration. You might go a little further out, and then see if it's liquid enough. These are things to consider as well. If you ever were to want to buy them back, right? Because let's say it moves in the short term in your favor and you just want to close it out because you don't want to have that capital committed in the back of your mind to those shares. Also, I'm giving a lot of disclosures on purpose because everything is dependent on your own situations, but also consider the size of your portfolios, because you may overextend yourself and you may not be comfortable with allocating that much to this idea. So if you're a smaller account, keep in mind that be careful with how many contracts you accumulate or sell. Keep in mind how much that's putting away as collateral. Are you comfortable with owning that much high tide? As another thing you should think about. So it's one way that some people have been using to accumulate shares at a different cost basis.
I should also mention that the options market is very illiquid, and you should do everything through limits, not markets, or you're going to get wrecked.
Yes.
Absolutely. Yes. Just in case any like new options traders who aren't used to, or maybe you're only used to like SPY options that are super liquid. If you try to market into one of these, they're gonna take like half your money right there.
They'll get singed pretty bad.
Yeah.
You'll start off on a bad foot.
Yeah. So limit in and out. Figure out where you think fair value is for the contract, and then just walk it like 5 cents into the market maker's favor, and then you're very likely to get filled there.
Yep, you got to give them something.
Yes.
For you to get exercise.
Yes. Yeah.
So, yeah, that's one way of doing it. But otherwise, the shares right there, I did not see they got down to basically $2.
Yeah.
So
I'm thirsty to buy more. I hate averaging up because this is still above my average cost basis, but I am thirsty to buy more.
Whoa, look who came out of left field. It's Andrew Marshall, episode 32 veteran. I survived episode 32. I tell you, it's a shit going. You can't convince me otherwise.
Thank you,
we should have had him on here. He doesn't own it, does he?
No.
Oh, he's not welcome here then.
Hey, wait a minute, Ryan. Where are your shares?
He's
Hey,
fine. He's fine.
I'm waiting. Hey,
Yeah, he's host.
hey,
He's
you
co-host.
take that back, boy. I'm the Starbucks cult leader. I know. I could do some bad
See,
things. At the
Ryan
next
will
cult.
be obligated to buy shares when, like, a year from now, Raj finally comes on.
Yeah, Raj is gonna come on after watching this, and I'm gonna have to buy my
It could be
shares.
$10 a share by then. You'll
Yeah.
have missed out on all your gains.
I know it's $10. That's $10 I could have had, today. Maybe
You know what?
maybe I'll, Raj repost this on Twitter, and I'll buy one share. It's a lot of money. $2 is a lot of dollars these days. It's half a Starbucks, but one repost and I'll do it, Raj. I just buy shares simpler. There you go, Tank.
Does anyone here have the options trade as well?
I have both, but you already knew that. Funny thing is that even with the move against, I still am sitting on unrealized profit for both positions under the Python umbrella. So it's funny.
The options one might be a little wonky right now as far as like what it's what it probably should.
But theta matters though, and
Yes.
time has passed. So
yes, I wanted to say for the chart drawers, for the crayon lovers, it's hitting a resistance point.
Oh, yes, it is.
Just saying, for the chart lovers and the crayon enjoyers,
Price is right at a diagonal trend line right now. If you draw a line from old higher lows and into this one, right now seems to be a pretty attractive place to be trying to buy at.
Oh yes, I got my Crayola out. Like I've gone nuts with this. Yeah.
I let YieldMax handle all my options.
So we were talking about ways to gain exposure through the options market. One of the things I used to do, but I have not done for the last 2 quarters because I'm too scared that the reaction is going to be positive instead of negative. I used to, the day before earnings, I would trim 10% of my position. And then 2 or 3 weeks later, I would buy those exact same shares back at a lower price. And then all of the money that it equals the difference of that, I would pick up some free call options. And I have not done this for the last 2 quarters because I was too worried that since the financials and fundamentals keep improving, that the market reaction to the earnings is going to be positive instead of negative. So because of FOMO, I have not been trimming into free calls, but I was doing that for most of 2022 and 2023. Or sorry, most of 2023 and the tail end of 2022.
Okay. Yeah, you did tell me right before the last earnings. You're like, this is what it usually does. And what did it do?
Yeah.
It did exactly that.
I keep hoping the behavior will change because the financials keep improving, and we're just getting sort of the same old. Like I should have trimmed 10%, and then today I'd be like, considering buying some free calls and buying back my shares.
I'm personally happy it went back down though because I'm still building it.
Yeah.
And you're a cigar butt investor. It wouldn't be on brand.
If it's not a falling knife, I ain't interested.
That's right. That's right.
Blake, me and Fiscal have talked a little bit about like how the bongs and stuff like they also sell at the shops are like imported from China, very high margin. Can you speak a little on that and how that could potentially add to their business?
Yeah, I hate to throw actual percentages on what the actual margins are, but I would not be surprised if they were above 50% gross. I would also not be surprised if they were somewhere below like 70% gross, like right in there. I don't really know how much they pay. I do know that Raj initially started buying glassware by the pound. So he could buy an entire shipping container worth, and he would have the factory that produced it loaded up into the shipping container, and then they would weigh the shipping container full, and he would pay them by the pound for the glass.
Wow.
And so when you're buying it by the pound instead of by the piece, you're buying it wholesale, straight from the supplier, and the suppliers in like Indonesia, Malaysia, Thailand, maybe Vietnam, maybe India. He has mentioned during interviews, he's mentioned maybe 6 or 7 different countries that we're getting this glassware from. I have gotten mixed information on whether or not the company is actually producing the glassware or if they're merely purchasing it from producers.
Mm.
So there is a line of thinking where it's possible that they like purchased a small glass factory in some small town somewhere in the Southern Pacific or whatever. But I don't really know that. I when I read online about the company, sometimes it is mentioned that this company is a manufacturer of glassware, and sometimes it mentions that it is an importer. So that would actually be a great thing to reach out to Raj and ask him. Like, does your company actually produce the glassware, or are you merely a middleman import export? I don't know if they have vertically integrated the glassware all the way into production, or if they're just buying it in a place that it's cheaper and shipping it across the globe.
Mm.
The company has a blended business model where some of what they sell are more staples and some of what they sell are more discretionary. And right now we've been seeing inflation erode demand for their more discretionary aspects of their business model. So as the economy improves and consumer confidence goes up, I actually expect for both the CBD branch of their business and the glassware branch of their business to do better than they are right now. So we've been seeing, these pretty impressive cash flows from a company that is theoretically supposed to be suffering right now because inflation is still persistent, and wages have not been keeping up with inflation, and the consumer's been feeling pressed on both ends. And so a huge chunk of what the company does is absolutely going to get heavily affected by that. And we're seeing that. That's why we saw write-downs. If you guys want to talk about the write-downs, that the non-cash impairments that the company took during the last two Q4s. So 2 Q4s ago, they wrote down the value of their CBD assets because the demand for CBD was extremely discretionary and it was heavily affected by inflation. And then this most recent Q4, they wrote down the value of their websites and the importing glassware portion of the business. And again, citing inflationary pressure affecting these discretionary businesses. So the portions of this company that are discretionary are currently suffering, and the company as a whole is still producing attractive cash flows. And when the economy as a whole improves, I expect for those two aspects of the business to also improve. And those were really high margin. Those were, the CBD was like 70 to 80% gross margins when they purchased. Is it New Leaf? I'm trying to remember the two names of the two brands that they have, but they purchased two CBD companies, and they were really high gross margins when they purchased them. Competition forced gross margins to collapse, and then demand dried up. But those have the potential to produce significant, side revenues, significant side cash flows. It all flows into the same pool of money, and by having all of these different revenue streams, the company can handle different situations well, right? Because at any given time, a couple of their revenue streams are suffering, and a couple of them are just hitting their stride. And right now, the ones that have been suffering, I don't expect them to suffer forever. And when that suffering stops, I expect for their total gross margins to improve a little too.
What specifically is like the discretionary stuff? I'm not experienced going to these stores.
Well, the glassware is discretionary.
Mm.
So anything that you consider a must-have item, like let's say for example, food is a staple, right?
Yeah.
But clothing is discretionary. If let's say you get hard up for money,
Yeah.
you are very unlikely to skip meals. You might go for cheaper meals. You might seek out cheaper meals, but you're very unlikely to skip meals. You will far more reasonably delay a clothing purchase or an appliance or a new car. And anything that you're willing to put off for later is more of a discretionary purchase.
Yeah.
Anything that you the consumer are unwilling to go without is more of a staple.
Well, I mean, some of the customers, you know what I mean, are maybe addicted to the product. I don't know if that would be considered a staple in their lifestyle. I don't know. I don't know these things.
I believe that for a majority of them, they consider it staples. Yeah.
Okay.
I like the flour and the concentrate are
Yeah.
for heavy regular users, it's a staple.
Okay.
For occasional users, it's discretionary.
Is their behavior at all similar to like the tobacco and nicotine users at all? Would you have any ideas on that?
Yeah, I don't think so. I don't think people get quite as like, rip your fingernails out frustrated when they don't get access to it, as opposed to what I've seen people do when they don't have access to nicotine.
I'm fiending for more.
Yeah. A big part of when I first stepped into this industry, I was like, man, I really don't understand this industry at all. So I went out of my way and talked to a bunch of people, both I know in real life and on the internet. I got on Reddit. I tried to get a grasp of what the consumers like and what their demands are. And it's really, the more I researched it, the more I decided it was kind of like wine, where a lot of people, they don't really care what specific like brand it is that they're consuming. They just want it to taste good. But a small percentage of people, like wine snobs, will always care where this comes from and what exactly it is and what year it is and all that stuff. But a majority of consumers don't. And so many consumers treat it as a fungible good, and a small percentage of them, it's the opposite. It's not fungible at all. Brands matter to them. Flavors matter to them. And a lot of that comes down to just consumer preferences.
So do you think they cater equally to both types of consumers? I mean,
yeah, I mean so High Tide's sort of building, all of these companies, every cannabis company on the planet is trying to build like a reservoir of high consumption users that are just eager to go to their store specifically and spend money. It's sort of like, owning a liquor store and just trying to capture as many alcoholics as possible, where you don't want the occasional consumer to just show up like once a week or once a month and buy like a small amount of alcohol. You'd rather have that customer who's in your store like every single day, buying just constantly, telling their friends about it, like talking about the great deal that they got at this, for this bottle of vodka down at the Total Wines and More yesterday or whatever. Like you want to build a relationship with a large number of heavy regular consumers, and those are going to be your bread and butter as far as establishing a solid consumer base.
If you're a socially conscious investor, this is not the company for you.
I mean, so they're making customers happy. They are literally chemically making customers happy.
Yeah, there's worse out there. This is a chemical-filled world, and
What's a morally worse investment, Vici or High Tide?
Monsanto is probably the morally most worse investment I can think of.
They're owned by Bayer, actually, so it would be Bayer.
Okay, so Bayer, got it.
Yeah.
Short Bayer for ethical reasons.
Yeah. Oh man. I mean, let's see. DuPont, maybe.
DuPont, yeah.
Oh,
Yeah.
chemical theme I'm sensing.
Well, I mean, the white baby powder is Johnson & Johnson is currently still trying to convince people that it's safe to put that all over their infants years later.
You could say maybe Lockheed Martin, maybe Halliburton.
All contenders.
Don't let 3M. 3M.
3M.
So I know High Tide is sort of a sin stock, but I think it's far less sinful than a lot of other companies.
Yeah.
I'd say so because, I mean, like the leading cause of death in many countries would be automobile accidents. Do we complain to Ford, GM, Tesla, etc. over that? I mean, that specifically.
You can find the skeleton in every big company's closet. Like it's.
Yeah, we've always said here on the Cash Flow Kings, if you look hard enough at any major company, you can find something egregious that they've done, or at least objectionable.
Nike has kids in sweatshops. Starbucks, they don't do anything wrong. Target's a bunch of devil worshippers. They're grooming children. You could make a case for any company. All right, I think we're hitting the end of a good hour, 40-minute conversation. But this guy is a legendary commentator. We tire on dividends. Ryan doesn't talk about social conscious of companies when you own a ton of Starbucks and just bought more McDonald's. Both genocide supporting stocks. Let the
Actually, something about McDonald's. McDonald's, and there was a good meme I saw, but it's true. So McDonald's operates, the franchise network. So you have McDonald's Qatar donated to Palestine, McDonald's Israel donated to the IDF, and so like the meme was like intra-company warfare. We have achieved advanced warfare.
Dan is buying Starbucks or McDonald's, correct?
They should settle it with a softball game.
Dan isn't.
No,
Yeah, I think he's
not.
fully allocated.
Yeah, he's held it for a long time.
Yeah.
And so he's not he's buying other things. But I have had a boomer itch.
Ooh, I like this.
Portion,
The 40-year-old era. We're back in.
I'm getting to that point. But no, seriously, I've allocated like this year. I'd say it happened. Bacon, do you think it's happened like mid-year? When did my boomer itch start?
Right around, like maybe about a month or two ago, it started to appear. Where
Are you buying treasuries?
No, treasuries. My boomer era is still buying common stock. In fact, I actually gave up on the whole fixed income thing because I had a portion of my portfolio I was still allocating to fixed income, and I decided to be gone with that, and I bought BTI instead. So, that's my fixed income.
BTI.
Yeah.
Fabio, at what price does Starbucks become not a triple cross play and a very real?
It's already not. You don't understand. It's like it's Jover. Like Paul is an idiot. So it's like if he was buying, it's
Gabriel, not the Paul in the comments.
Yeah, not other Paul. Paul
Or
Gabriel.
Paul Samenholder.
Sorry, yeah. Paul, you unfortunately have the same name as a very prolific
YouTube
stock guy. I don't want to call him investor because I can't call him an investor after what he did with Nvidia.
One of the worst
gambler,
stock pickers.
One of the worst stock pickers with such arrogance. By the way, let me just say, I think like when I come across that, and on the internet there's plenty of them. If someone has like the level of arrogance that Paul has with the track record Paul has, oh my god,
he's the LeBron James of the stock market. I thought you knew that.
Yeah.
Jeremy was leaving comments on my videos on alternate accounts.
He does that. He does that. He has the David Kelly account.
That's humbling. I'm proud of it. I'm happy we got Jeremy.
Freezer Pairing leaves comments on my videos.
We're making it. We gotta have a CEO beef on the channel.
That is a bear indicator for high tide. If either Jeremy or Paul were to buy high tide, I'd have to seriously reconsider what I was doing here.
He was too busy buying Planet 13 because he's like, oh, Planet 13, oh, it's in Las Vegas. Oh, I go. Oh, buy Peter Lynch. Buy what you know.
And last topic before we hop off here, Comer and the Tesla / Crash combo because Citizen of the Year wanted to talk about it.
Okay. Oh my goodness. Like he is so dense with his inability to recognize what just happened that Tesla had an insane rally and he's still like, if you look at his portfolio, he's still down in the portfolio. Like the biggest position in your entire portfolio by a wide margin, the underlying just went from like almost vertical line. Pull up at the Tesla stock price. This is insane. And then this guy doesn't get it. Like, but it's funny. It's kind of sad. I think he does have a disability at this point. A disability in terms of
disability of too much money in my income.
No, because the military has like a threshold of where they won't accept someone based off their IQ. I think he's like right on the edge. And so like it's not like a legal disability, but he is basically in commonplace of like among peers, probably considered to have something bordering that.
I think it's.
I know I'm doing being
80s, where I think the cutoff isn't it like in the 70s or 80s, like for like
he's. So that's why I almost at first I was like, man, should I even like criticize this guy? Because it's like I don't yell at people who are
It's like Raul's rotten rants.
Yeah, I don't. Well, he might be suffering for something else.
But yeah, Khmer is definitely the definition of a room temperature IQ for sure.
Yep. Tesla 1 month, please.
But you're not very smart at all.
He is a little bit malicious. So then I did say open season to this guy. But yes, and then pull up Tesla, but do the comparison chart on Google Finance. You can put them side by side. If you do more about Tesla. Oh,
I got it. Let me cook.
Don't tell me you're a boomer. You're supposed to be a zoomer.
I own McDonald's and Starbucks. What do you expect?
Sorry, he
does
lost his
invest
train
kind
of
of
thought,
boomerish.
like certain presidential candidates after 8 p.m.
Come on, man. Come on. You're a lying, two-faced dog pony soldier. That's what you are, Fiscal.
Sorry.
Ryan, am I going to find out your largest position is TLT?
I didn't want to expose it.
Rates plays.
At some point, it will be the correct time to buy TLT or buy calls on TLT. I don't know when that is, but at some point, very soon, like within the next year or something.
I got another one for you.
I think the yield curve is going to uninvert, and I think TLT is going to have a pretty significant rally.
All right, there you go.
Okay.
Oh, good old Portfolio Labs.
No, we just need not the drawdown, but the
There we go.
performance comparison next to each other. And then look at that deviation recently.
Is this adjusted for distributions?
I think this is total.
Is this total return?
I don't think so.
Yeah, I think it did mention towards the tail end of that. Sorry, viewers, you got to
Pull it up
see me
again.
get really close up. Yeah, chart below displays the growth of $1,000 investment in both assets, with of something of price adjusted for splits and dividends.
So this is the part that they genuinely don't understand, even though you try to break it down like a goldfish, is that the downside risk is equal on both, but then the upside return will be capped on one versus the other. So then some of them, particularly one of them that for some reason has an out for Citizen of the Year, and I think he has an out for you. He's the guy who he also huge arrogance, just started investing, displays an aura of arrogance that's like, just
Shoe shiner?
palpable. I don't know who Shoeshiner is.
No,
Where
it's
we-
the
where we
one
were
that has
from.
The
the
other
one that has
guy.
it out for us. He might have made an imitation Cash Flow Kings channel at some point.
Oh,
Episode 32.
okay.
Yeah.
I don't know who you're talking about. Never heard of her.
Oh, well, he's a guy who got jumped by you guys in your server.
Yeah.
That's Shoe
Got
Shiner.
jumped. Oh, that is.
Oh,
Shoeshiner?
yeah.
That is Shoe
Five
Shiner.
Lambos.
Yeah, that's Shoe Shiner.
Mr. owns 5 Lambos.
No.
No,
That's
Shoeshiner.
another.
Shoe
That's
Shiner
another guy.
can rent
Okay.
a Lambo for an
He's
hour.
talking about the tactical stock scalper. That's his actual channel.
Okay,
Yeah,
that
Shoe
guy.
Shiner.
Yeah.
Shoe Shiner couldn't rent a Lambo for an hour, let alone probably 10 minutes. So I wouldn't
Yeah.
get
Like-
that ambitious, Blake.
He gets a little, joyful about understanding words and concepts, and he talks about nav erosion, and he kind of he doesn't describe nav erosion properly, and so the nav erosion isn't necessarily from the price going down, and I think that's what he means nav erosion is. So structurally, these will always have nav erosion, and you'll see it right now. So buying Tesla is silly. This is like ranting because I've said it so many times. You're taking on the same single stock risk of buying Tesla, the same exact single stock risk to the downside, and then you will not have the upside. So in the case of like today, I promise everyone, the longer we take this chart out, and this product maybe will exist out into the future, the separation in performance will only go in one direction, because on any spike up, you're not going to capture the spike up, but you'll capture the spike down, because any spike down, you have to realize the losses. And so there's only a small range of volatility that the stock has to go through where the product will outperform the underlying. That's an improbability. That's a mathematical improbability. You can't expect that for every investment, because now you're doing a whole other level of analysis. Well, now you're telling me you're going to do single stock analysis. That's already hard. And then on top of that, you're going to tell me exactly how the stock is going to react over the next year or so. Congratulations. I think you've just become the greatest investor of all time. And everyone should be breaking down your door to give you, $1 billion, as much money as we can possibly give to you, because you're actually better than Warren Buffett. We're already talking about people that believe a 20% annualized return is like, just buy this product. There you go. It's easy. It's ridiculous.
All right. I honestly think Khmer and Tactical Scalper
Crash. Say what?
they're up to the challenge.
Yeah.
It's already hard. Don't worry, they got it.
Crash a short Tesla. That's
Well,
common logic.
Crash uses a covered put strategy in much the same way that Tesla is doing covered calls.
Mhm.
It's pretty much the same thing, just upside down.
As
They
per
build-
usual, a citizen of the year don't understand.
Yeah, they build a bearish synthetic, and then they sell puts against the put that they're long.
I don't get these guys, man. All the
of
haters
all-
in my comments.
Of all these like covered call strategies, and there's a bunch of them. So far, and I still don't think this is super attractive, but so far the most attractive ones I have come across are offered by Roundhill. XDTE and compare that to the SPY, and then QDTE and compare that to the NASDAQ. And what they're doing there is they own a deep in the money call that's a leap, or at least it has a long expiration on it. And then they're selling daily calls against that. And so they're arbitraging the difference in theta between the call that they're long that's deep in the money, and then the calls that they're selling that they're short on that are 0 DTE. And then they're also, if the market moves overnight, they have exposure to that. And the only time that they really lose money is when the underlyings are super bullish for a single day. And then that's when they lose their money. And so far, like they've only been around, I don't know, a couple months or whatever. I'm going to need to wait for them to prove themselves longer before I will ever put my own money in them. But so far, those two seem to be the most attractive of all the covered call strategies. Many of them are too aggressive. They're selling calls that are way too close to the current share price. They're not going up and out far enough. They're selling things tight and close. And when you sell things tight and close, the frequency with which the underlying blows past the strikes just happens way too often. And so far, and I don't want it to sound too much like a commercial or endorsement, those two are the most attractive that I've come across. They still don't fall above the threshold where I actually want to put money into them.
Wow, this is crazy. This is the first ever $2 donated to the Cash Flow Kings.
You owe
Congratulations.
Yeah,
And
you
it
owe
is a blank
coffee,
message.
Starbucks.
Yeah, I gotta buy Fabio Starbucks tomorrow now. What do you get, Fabio?
I get because I make my own coffee at home, so I get the teas. I get the
I see.
white matcha,
I see. Yeah, I know. The
Yeah.
green drink.
the green drink. Yeah, that's my
Fabio,
go-to.
why didn't you go to the Yield Max conference in New York 2 weeks ago? I was
Man,
expecting to see you there.
They just said I don't know. Actually, I don't know. I'm offended they didn't invite me.
He was
I've been
persona non
nothing.
grata.
Yeah, I've been nothing but receptive to their product. I said their product has many use cases and that belongs in everyone's portfolio. It's saved so many lives. In fact, like before their products even existed, I thought America was dead. All the people would just die poor, and all the top 1.00001% were the only ones who would survive. But they came out and graciously offered this product that offered the performance of Warren Buffett at the tip of our fingers. So I frankly don't know. I feel like they just wanted a more heavy hitters like Kemmer. So
Oh, all right. I'll give you guys all a proper outro. Blake, do you want to start off? Promote anything, plug anything you need to. I know you got the podcast with Andre and Coach. Anything
Sure.
you need to.
Yeah, so for anybody who wants to find me, I write articles on Seeking Alpha. I have my own personal YouTube channel that is equal to my name here. Let's see. Oh, I'm doing it backwards. No.
Link in description.
Yeah, link in the description. And then you
That
can
way.
find me on Brewing Great Returns, where I argue with Coach and Andre about everything from macroeconomics to how to pick stocks to, we often have on fund managers and stuff like that. Just whatever we feel like doing that week.
Yeah. There you go, Blake. Absolute pleasure. High Tide cult leader. Thank you for coming on, buddy.
Thanks, Blake.
All right. Now, who do we want to, send off the ship next? Who do we want to go with? I think we go with Bacon.
Yeah, bacon. All the way
Bacon.
with bacon.
Promote anything, put it in a good hour 54 of work. So,
Thanks.
By the way, 50% of any last minute super chats will go to his prosthetic arm.
yeah, he gets a new arm. Yeah. It's a lot of money, but yeah.
So Andrew and myself have our own little YouTube channel side project thing called 2 Accountants, 1 GAAP, GAAP. Just talking about either accounting nuances or some basic like finance from like an undergraduate perspective. So like been bouncing around some like different topics and ideas here and there. But yeah, I also have Twitter 0G Bacon Memes if you want. But yeah, you don't have to. Thank you all for having me on. Always a pleasure.
He posts 10 quality stocks to buy every 30 minutes. So if you're looking for quality,
Good
high dividend
times.
stocks to buy, those are ones. Bacon, thank you. We got to get Andrew on sometime. Episode
do.
32 veteran. All right. See you, Bacon. Have a good one, buddy. Well.
So it is down to you, and it is down to
you,
me.
boy.
Do we want to end it with a pose off?
Oh, that's a little diabolical. What if we're uncomfortable with that, Fiscal? Is this
Side
a safe
chest.
setting? All right, I gotta do the pronunciation now. Lat spread.
What?
Front double bicep.
Front double bicep.
All right, I think
Outward.
I win that one hands down, guys.
Wow. The home of Tremboloni podcast. Fabio, promote, plug anything. I don't know, I'll PayPal you the money for the coffee.
All right. So you guys can follow me on Capital Mindsets, the name here on YouTube, Twitter, Twitch, if you're into that. But yeah, I do post, 10 stocks to buy every 5 seconds. I'm a little bit better than 30 seconds. Not bought at all. And it doesn't, rip from the Motley Fool at all, I promise.
Not
so
ChatGPT generated.
not ChatGPT generated content, not at all. Why would I? Me? Never. Yeah, no one ever even does that on Twitter, actually. That's all made up. That's all haters say that. And yeah, you guys can follow me or talk to me on the Ryan's Discord or Fiscal's Discord. I'm pretty actually reachable. You guys can, or you can fight with me.
I can vouch very, very lively conversations that we have on that Discord sometimes, right?
Yes. Yes. And today, because of, I think it was like, I'll say this today because of like potentially work stress from this week. Sometimes I go like, all right, I'm out for blood today.
Look,
sorry,
Peter, if you're
make
out there,
money from
I
my
do love you,
research,
Peter.
You don't, okay?
Peter, yeah.
No. That was like, I was like, oh my god, this one needs to be put in this place.
No, I mean,
but Peter, I love you.
Honestly, I'm kind of kidding. He's not usually like that. Maybe something going on with him too.
Yeah, you got to put him back in his cage, Fiscal. Enough's enough.
His cage.
My brother Milo. All right. Thank you once again, Capital Mindset. We'll see you. I'll PayPal you the money for Starbucks. Send me your email. All right. So the new deal on the channel is every time one of you guys sends a super chat or something like that, and if you request it, I have to do the impersonation. There's no such thing as a free lunch, as the kids say. So I think it's very fitting we tell you on dividends. He gets his impersonation. He wants a tactical shoe shiner impersonation. I will do my tactical shoe shiner impersonation. Now, I'll give you one last, and this really adds the impersonation. We tell you on dividends. Do you want any specific situation? Do you want him anything specific that you want me to, kind of dial in on, and I will do it. So while we're waiting for him, once again, me and Fiscal want to thank you all for tuning in. No weekly recap this week because this is news to Fiscal. I haven't told him this, but I've got to go to Chicago in 2 weeks, and I'm literally unable because we're going to go backpacking the day of Saturday, 8 p.m. Eastern. I'm going to be in the middle of the woods. So, we're going to find an Illinois State
where
Park.
certain people can't find you, right?
Yeah, where certain people can't find me. Good luck. That's all I'm going to say. But yeah, unfortunately, I won't be able to attend the Cash Flow Kings in 2 weeks. So we're going to do a giant weekly recap basically after next week. And it's going to be good times. All right. All right, guys, what do you want? All right, guys, welcome back. It's the Tactical Stock Scalper. Boy, oh boy, do we got a good one today. So what happened essentially is I logged on Discord this afternoon, and there was somebody in the chat, and just stop. and there was somebody in the chat, and he sent his Telegram, and it wasn't banned yet. So what I did essentially is I banned him, and then I started thinking to myself, why do there got to be haters for everything? So then I opened up YouTube, and I look in the comment section of one of my videos, and it's Mary E. Smith. And Mary E. Smith wants to drop her Telegram, and I don't get this. So then I figured it out. It must have been Citizen of the Year, or that Ryan. I don't even know that guy's name. It must have been one of those two. They must have hacked my YouTube channel, and they're trying to take advantage of me. Now, why are they doing this, guys? Why would they be doing this? It's because they don't like my personal investment strategy. That's why it is. So now they're feeling the need to attack me. They're sending these bots after me. They're trying to scam me. They're trying to probably get my channel shut. I was on a roll there. I'm not even gonna lie. That's the kind of
that went longer than I thought it would.
That's $2 worth of impersonations. I hope you're happy. Thank you. That's the first ever $2. Cashflow King's name. We'll take it.
I mean, we're about 1/500th of the way there towards recouping the capital invested in setting this whole thing up.
Yeah. Cashflow King's the non-cash flow generating asset at the moment. But you can fix that by hitting the like button, subscribing. A lot of you guys were talking about how many, how many high tide shares you guys have. A lot of wealthy people in the chat. I'm just saying, you can get a Making People Wealthy merchandise. Once again, thank you all so much for watching. 2 hours here. I'm pretty tired. That was a good time.
It was fun.
Once again, check out the merch. Check out the merch. The link.
By the way, on your way out, hit the like button, everybody.
Hit the like button. We appreciate all the support. It's a marathon, not a sprint. Just like my YouTube channel. All right. Thank you guys for watching. Smash the like button. Subscribe. Do dividends, stocks, drugs. And of course, remember, cash flow is king. Oh, yeah.